Thomas, the whole-time director at Suraj Estate Developers, joining in with us. Very good morning, Rahul, and thank you so much for joining in with us. Let's start by talking about in terms of the Q1 update that's come in, that your company reported just a couple of days ago. How many of your projects are now nearing completion in terms of that? And what's the revenue potential that you're expecting from these other projects that are there?
In terms of our projects which are getting completed, we expect two projects which are getting completed in the next quarter, which we will be handing over. In terms of our new launches, we have a pipeline of 1,150 crores of new launch pipeline, out of which 450 would be the commercial segment, which we'll be launching, and approximately around 700 crores would be from the residential segment.
Rahul, give us a sense about the sale deal that you've entered into with CCIL. What kind of an impact that's going to have on your top line growth?
So the deal size was for 90 crores. It is for the sale of three independent floors to Clearing Corporation of India Limited. It's the second deal we have. We earlier constructed their corporate office, and this is an additional area which we got due to the FSI increase, which of course we sold to them as a build-to-suit option for them.
Right. So what have been some of the drivers for the company, and what do you think is going to be your growth strategy going forward? Are you eyeing any expansion outside of Mumbai MMR?
So our target is obviously to get the pipeline of launches on track. So as I told you earlier, our target would be to launch the 1,150 crores of plots which we already have in advanced stages and bring them to the launch stage. So if I have to give you a breakup of H1, H2, roughly about 800 crores would be the launches coming up in the first 6 months of the financial year, while approximately around 350 crores would be for the next 6 months. So it's a busy time for us, and I think our entire team is geared up for getting these launches on time.
Also, in terms of what kind of revenue are you projecting to clock in FY25, and could you share the outlook on pre-sales as well?
I would rather talk about the pre-sale numbers. Our target guidance, which we gave earlier, was 850 crores. And I think, the entire team is geared up. And I think we're very confident of achieving those numbers for the entire year.
And what is the visibility looking like in terms of the launch pipeline for FY25? Will redevelopment projects be the primary focus? Are you even looking at acquiring any land or developing any greenfield projects?
Yes. So I think it's a mixed bag. Wherever we have existing land parcels, we see an opportunity of adjoining plots where if there is a society land available. We've done that in 2 occasions in the past where we've gone under 33(7)(b), where it's obviously an asset-light model where you develop the plots and tie up with the society members. And our current developments are in under 33(7). So we've done that in 2 cases where we merged 33(7) plots of CES properties along with society redevelopments. Going forward, we are opportunistically looking at acquiring lands, not necessarily putting upfront land costs as of now, but yeah, society redevelopment is something which we are looking at actively.
Right. And what's the debt picture looking like for your company? And by when is it that you expect to become net debt free?
So our net debt to equity ratio right now is about 0.6. We recently paid off a high cost debt recently, which we've also informed the stock exchanges with. So overall, we have deleveraged the high cost debt in our books. So if you see overall, all the high cost debt has been paid off, of course, through the IPO proceeds and also through certain sales, which we have done recently. And now debt to equity ratio, as I told you, is about 0.6. With the new launches, we would take a bit of more debt, but it would be in the same range of 0.7 to 0.8. It will not exceed that.
And just lastly, how are you seeing the trends in the real estate sector shape up? And especially, what's your outlook on the demand, given that the sector has seen such a good run-up post-COVID? In this cycle, where do you see currently the real estate segment? And do you think that anyone should watch out for a slowdown anytime soon?
So as we said, we are in three primarily segments. We're doing value luxury, which is the 1 and 3 crore bracket. So that segment always did well pre-COVID, post-COVID. So I don't see any slowdown at all in those segments at all. Even in the luxury segment, I think all the developers would agree that they're doing well. So in fact, our average realization has also gone up, quarter on quarter. So I see this is the first time where we see even commercial doing well along with the residential. We are seeing a huge demand for office spaces requirement coming up, and just to cater to that, we're doing a project which has a GDP of approximately 450 crores on Tulsi Pipe Road.
All right, thank you so much for taking time out and joining in. That's the word coming in from the management of Suraj Estate. Let's move.
If you like this video, then like, share and subscribe to ET Now.